Hey everyone, I'm Greg Beaufait with Dundee Venture Capital, here today to talk about this exciting new opportunity within software with embedded insurance. And the audience for today's conversation is CEOs, founders, product leaders, investors, any executives thinking about new ways to grow their software business. I'm joined today by Brock Noland.
Happy to be here.
Brock's got an amazing background spanning multiple successful software businesses. He's now spent the last couple of years building at this really unique intersection of vertical software and embedded fintech, specifically in this case, embedded insurance. Brock, we talked a little bit about the audience that can benefit from this conversation today. What do we hope they get out of this conversation?
Yeah, today we're going to talk about embedded insurance, which is a new tool in their tool belt, and how it differs from existing tools, like payments that may have been introduced or implemented in the past.
There's been an industry shift beyond pure software into this concept of SaaS plus. Can you define what SaaS plus is and what's driving this shift?
SaaS plus is really extending beyond pure subscription software into ancillary financial services and really monetizing more of the customer. This is really driven by a couple different things. Number one, in these vertical software markets, oftentimes there's a limited TAM, and by adding additional financial services, you're able to monetize more of the customer without acquiring new customers. And it's also driven by customer expectations. They're expecting now that payments are integrated, that insurance is integrated, and that you provide an end-to-end solution. As opposed to just some type of workflow software, they're expecting that payments and insurance and these other financial services are fully integrated and easy for them to access.
Who's done this well? Which of the big platforms have done this well, not just from a product perspective, but from an actual revenue perspective with this SaaS plus concept?
Toast is a great example. So they started out as a workflow software for restaurants, and they could charge a couple $100 a month per restaurant. By adding payments and intermediating payments and other financial services, they're able to get a couple $1,000s per restaurant. So significantly increasing their revenue without acquiring new customers.
What do we mean by this concept of embedded insurance? Can you define that for us?
Yeah, there's been this concept in insurance, selling insurance online, called affinity insurance, where there's a landing page that someone may go to that's branded where you can purchase insurance. And that's not what we're talking about. What we're talking about is embedding the sale of insurance or other risk transfer product in the workflow. Ultimately, there's places in workflows where there's financial risk. Booking a trip, planning an event, those are the places that you want to embed insurance because it's contextual and relevant to that risk that they're undertaking at that time. Ultimately, there's people that are booking or using your workflows where there's risk that they're undertaking and they're thinking, am I going to get sick? Am I going to be delayed? Am I not going to be able to take advantage of this financial investment? It's super important that it's delivered inside the platform workflow, not redirecting you out to another website, that it feels native to the platform where the original transaction is happening.
What's one thing that people misunderstand about embedded insurance? I think what you just mentioned is probably one of them, that I can click someone out or I can send them a marketing email with an insurance package after a transaction happens, and that works. It just doesn't. The conversion isn't there, right? We've seen that. What's one other thing that people get wrong with this concept of embedded insurance?
Yeah, sometimes people will, let me put it in our marketplace and we'll have this kind of like clunky experience. It's super important that embedded insurance is seamless and aligned with whatever risk they're undertaking and is provided when they're thinking about that risk. Timing and placement are equally as important as the product.
And how do you figure that out? If I'm a software platform, how do I figure out what's the right timing to offer this within the workflow? What's the right insurance product to offer it, and what's the actual user experience look like? How do I figure that out?
The key thing is finding those places in your workflow where users are undertaking financial risk, however small. That's an opportunity for embedded insurance. And importantly, it's key to have the right product that's built for that particular use case and not just take some generic off-the-shelf product that's not directly applicable.
Let's bring this to life. Can you share a couple examples of where embedded insurance delivers real value for software platforms and their customers?
Yeah, anyone who's gotten married knows how stressful it is and how many different things you have to remember. Well, one of those items is going offline and buying a liability and a cancellation insurance policy that venues require. And so making that experience native to the platform where the wedding is being planned just ultimately reduces the headache and makes it a lot easier for brides and grooms to be. Another example is, oftentimes you may go on hotels.com and they offer a travel insurance product for your hotel room. But the reality is that that's a small portion of your itinerary. And so we've introduced this concept of itinerary protection that protects your hotel room, it protects your ski lift ticket, it protects in case you get hurt while you're skiing, as an example.
Concept of embedded insurance is somewhat novel. We're defining or putting structure to the opportunity today. Are these novel insurance products too, or are there existing products out there in the marketplace that you're bringing to vertical software platforms?
So it's really both. If it's an existing product, it's probably a broken insurance distribution case where we can, someone has to go offline, off platform to purchase an insurance policy and then come back and share it with all the different parties. Now with vertical software, we can make that a seamless transaction to share with all the parties. Or, in other cases, there's cases where, there's risk happening that on your platform that needs new insurance products to be created. And that's actually really exciting for us because we think there's thousands of new products that ultimately will be created over the next few years.
So you've got new products, you've got existing products, broken distribution model. What do all those have in common?
There's some type of transaction or workflow that involves risk or uncertainty. That's really the core. And then by embedding insurance in that workflow, it reduces friction and helps users that are kind of on the fence of a transaction or decision move forward.
Not just incremental revenue, but a better user experience. They don't have to go outside the platform to get something they're going to need, an insurance policy, and have to figure out who to talk to and how much it costs and all that stuff. It's just native in the platform. So I can drive incremental revenue and just a better customer experience, which, to your point, is driving retention, lower churn, better conversion, all that stuff for a software platform.
Exactly.
What's the upside for a software founder, and why is embedding insurance in their platform worth it?
Ultimately, it allows you to drive revenue up with customers that you've already acquired. So you pay no CAC and you have additional revenue. That revenue is pure profit. It goes directly to the bottom line. Furthermore, it allows you to drive up conversion. So there's a significant amount of users that are feeling, risk or anxiety about making a purchase, and offering them the ability to offload that risk at the time of purchase increases conversion rate, around 5 to 15%. You can also drive a high ROI because if you're working with a partner, you can go live in a couple weeks and be earning revenue, a month from now before your next board meeting.
That's something I want to double click on. Time to go live. If I say yes on embedded insurance, a month from now I can be generating revenue report out to investors like me if I'm a software founder. How is that possible? I'm used to thinking about embedded payments taking months, quarters, years in some cases. How is it that easy? How is it that different to embed insurance versus payments?
Yeah, so payments, you're touching every single aspect of your platform to integrate payments. And so it's a very large project, multi-years in many cases. With insurance, we're touching one or two places in your key workflows to embed the insurance product. And so it truly can be done in several weeks' time.
Can you give us an example of what this looks like in terms of actual numbers, revenue for a software platform?
Yeah, let's assume a $500 transaction and a 7% insurance premium. That'd be a $35 overall cost for the insurance. Platforms are going to keep 20 to 30% or $7 to $10 per sale. And if 10% of users opt in, which is very common, that ultimately drives 70 cents to $1 per transaction in added revenue. And at scale, this becomes a very meaningful margin.
Are there platforms out there that are making more from the insurance, 100% margin, than from their core software offering now?
Yeah, it depends on the vertical, like whether it's optional or required as part of the transaction, but there absolutely are vertical software platforms out there that a majority of their revenue comes from the sale of insurance.
Brock, if embedded insurance makes so much sense for so many software platforms, why hasn't everyone done it by now?
Yeah, there's a number of reasons. The first is regulatory fear. Insurance is an opaque, Byzantine industry that's regulated by each state individually, and so there's fear around that. There's a perception problem that insurance is an old, stodgy industry with kind of a bad rap. There's also a mindset gap. So, SaaS CEOs and product people are used to talking about NRR and CAC and churn and things of that nature. And in the insurance space, they talk about GWP and loss ratios. And ultimately, it's a very different mental model.
So what's the solution then for a software company that sees the 51 different states and jurisdictions they want to get licensed in, doesn't want to touch that, but wants the benefit of embedded insurance? Or from my side as an investor, I want as many of my companies getting as easy revenue as possible, but without the regulatory piece that might slow them down. What's the solution here?
Well, the good news is that platforms don't have to figure it out on their own. There's a whole range of providers that will help you do so. So there's API-only providers that will be the peer license and API pipes to an insurance carrier. There's people that are good at finding insurance products that are applicable in a particular use case. But importantly, you want someone that covers that whole range in addition to the go-to-market support. So if you just place an insurance product in your workflow without communicating to anyone, it's not going to go well. You need to communicate to all the various stakeholders why the product is there, what the value is, and then importantly, handle the post-purchase customer experience. So whether they're filing a claim, they have questions about their policy, or they just want to cancel the policy that they purchased by mistake. Ultimately, you want someone who understands your business interacting with that customer, not an insurance carrier.
Especially at scale, because there might be thousands or tens of thousands of policies that want to be canceled, there's a claim or something else, and you as a software platform probably don't want to be dealing with that all day long.
Exactly.
If a founder wants to embed insurance, what are the strategic paths they can take from there?
Yeah, it's a classic build, buy, partner question. And so if you build it, you have total control, but you've got to deal with all the licensing and things of that nature. It can take you years to go live. Buying, you could buy a provider out there, but then you have to maintain that, going forward. Partnering, provides the least distraction, and I think ideal for most players in the vertical software space. I think you want to work with a partner that's really a software company like you and understands developer experience, understands modern, clean APIs, and post go live ultimately is going to own that portion of the page for you and be driving conversion rate up through A/B testing, testing price changes, testing product changes, and ultimately drive revenue to you by doing that work.
And if I don't partner, if I try and do this on my own, all those tests, tweaks, optimizations, copy, pricing, product, I've got to do that on my own.
Exactly, and if you look at our largest platforms in the world, eBay, Booking.com, Expedia, they don't do it on their own either. They partner with someone.
What does it cost a software platform to implement embedded insurance?
Yeah, that's one of the unique aspects of embedded insurance. It should cost you nothing. In fact, every time a policy is sold, you're going to earn additional revenue. And that revenue has no cost of goods sold. So it's going to be $1 of revenue, and it's going to fall all the way down to the net income line. And so if you're implementing a solution like this and the partner is charging you a SaaS fee or upfront fees, that's the wrong partner. The partner should be paying you.
What does an ideal embedded insurance partner look like for a software platform?
If you work with an API-only partner, they're going to be focused very much on the launch. And it's not just the launch. A true partner, as opposed to a vendor, is going to be a long-term relationship where they're going to be focused on optimizing your revenue from this offering. They're going to be doing the conversion rate optimization, whether it be product tweaks or copy tweaks. They're going to be controlling that.
We've talked a lot about a software platform's customers. What about their customers' customers? How does embedded insurance benefit the end user?
The first benefit is reducing anxiety. So when people are at a decision point and there's risk associated with that, they're feeling anxiety. And by offering the ability to transfer that risk to someone else, it ultimately reduces their anxiety. The next piece is, they may be required to purchase insurance through an offline mechanism, which means they got to go enter their information on some other form, information they've already entered, and then provide a certificate of insurance to a whole bunch of parties. Just making that seamless and easy is a big benefit as well. Finally, there may be risks that people are undertaking where there's no insurance product they can purchase for it. And so allowing more and more people with specialized risks to transfer that risk to someone else is another benefit.
Occasionally we hear from software platforms that say, hey, my customers haven't been asking for embedded insurance. Should they still do it?
Yeah, there's a decent chance that maybe you haven't heard about it, but your competitors have. And so, as a software platform, you care about conversion rate and driving your revenue up. And, there's people that are on the platform, they're deciding not to move forward with a transaction because of some risk. And so offering that ability to transfer that risk at that critical point in the customer journey is going to drive bookings up, which is going to drive your SaaS metrics up. And then lastly, there's multiple parties involved. So there's the vertical software platform, their customers, and then the end users. And a lot of these insurance problems exist at the end users. And so, it's possible the need exists, but you're just not hearing about it.
So the end users want this. We've seen, would pay for it, would buy these policies, even if it doesn't filter up to the customers of the platform and then to the platform themselves. The end users want it, need it, will purchase it.
Yeah, there's many times where we've talked with a platform, they've said, our customers aren't asking for this, we've got them to move forward, and 10% or more of those end users ultimately opted into the offer, and it's been a big financial boon to the company.
We've talked today about how critical embedded insurance is to the next era of SaaS and how big of an opportunity that is as we transition from traditional software to SaaS Plus. Just walk us through your vision for the future of software and how embedded insurance plays a role in that.
Yeah, I think, similar to payments, embedded insurance will become expected, ultimately expected by your investors and expected by your customers. Vertical software is moving from being a simple workflow software to a full industry solution, including payments, insurance, lending, so forth and so on. And so ultimately, insurance is going to be table stakes for both your customers and your investors. We've had a number of customers of the platforms we work with who have changed platforms and then reached out to us and asked, why is your insurance not on this platform that we've just moved to? And so ultimately, insurance can be a mitigator of churn and a true driver of customer value.
So we've talked about the impact of embedded insurance on vertical software companies, including churn reduction, increased revenue, 100% margin straight to the bottom line, more platform stickiness, better customer experience. I'm sitting here thinking, I want more of that for all of our portfolio companies. Where do I start? What question should we as investors, venture capitalists, private equity investors, what questions should we be asking of our portfolio companies to figure out? Are they thinking about embedded insurance? Do they have opportunities in embedded insurance?
I would start not asking about insurance. I would ask questions like, is there places in your workflows where the user is taking on financial risk? If that financial risk could be transferred to a third party, what would that mean for your business? Would it drive up conversion? And if so, what would that mean? I think those are the key questions. It starts really from the user need, and then you work backwards to the insurance solution.
We've covered a ton of ground here today. I've certainly learned a bunch. For you, what's the one takeaway you want founders to walk out of here with?
Yeah, I think the key is insurance is not a distraction. It's a value multiplier. It's one of the few places that you can earn revenue, improve your user experience, and build trust all in one go.
That's the founder view. What about the investor view? What's the one takeaway for any investors that are listening to this?
I think the key is that this can be a real driver of financial results for your business. And, I think you challenge yourself to have revenue by the next board meeting.
All right, that's my challenge. Our portfolio companies too is to have multiple of them with revenue from embedded insurance by our next board meeting. I love it. Well, thanks, Brock. Learned a ton about embedded insurance. Really excited about this opportunity for vertical insurer, but also vertical software companies as they think about embedded insurance. So thanks for sharing your wisdom today.
Thanks for having me.